You're listening to the REI Clarity Podcast, the show that guides you from confusion to clarity and sets you on the path to financial freedom faster. Learn how to grow your portfolio the right way. With your host, REI advisor and co-founder of Shine Insurance, Jeremy Goodrich.
Hey, this is Jeremy Goodrich, your host for the REI Clarity Podcast. I'm super excited about today's guest. He is a real estate investor, has grown a large portfolio over time, and is now helping other investors to do the same. His insights in the interview that we're about to share are so good. He digs into a couple of different things, and I want to give you a quick overview right now. First, he talks about his story, how he got into it. He was going to be a nuclear scientist, and he'll talk about that a little bit, and decided instead to invest in real estate and to take the knowledge that he has and the capacity for data that he has and put it towards real estate investing. He tells us a little bit about that story. And then he digs into creative financing. And what I love about the types of creative financing he gets into is all of it doesn't really require some big funder. It doesn't require someone with a bunch of money, because most of us don't know someone with a bunch of money, right? And so each of his creative financing solutions that he goes through, there's 4 of them, are ways you can do it without knowing someone with a bunch of money and without using a bank necessarily. So that's what he digs into after that. And then at the end, he will tell us his 3 steps to clarity, which I think bring it all back together. In between, he'll share some insights about books that he loves, individuals you might follow to find guidance and information. So without further ado, here is the interview with Dee Stevens. Dee Stevens, thank you so much for joining us.
My pleasure. Thanks for having me.
And I just wanted to start out by saying, you are on social media a lot. I see you on Facebook a lot. And you have a way of really engaging that's funny and interesting and thoughtful. And I think that if folks don't follow you on social media, they really should, because I think your voice is awesome. And I just wanted to start by thanking you for being willing to, be out there and share yourself a little bit in those spaces.
I appreciate it.
Cool. So tell us the story of how you got started in the investment property world.
Actually, I got started when I was a college student at Georgia Tech. That's when I really got started. I was working at a nuclear pharmacy, and I met one of the guys that was one of the drivers. They used to deliver the medical stuff we would deliver to hospitals around Atlanta. And he turned me on to a guy by the name of Carlton Sheets at the time. And I would see Carlton Sheets come on late at night, and he would talk about this no money down strategy. And I thought it was a scam. Yeah, it's no way possible. But I was really speaking from my own ignorance at the time, because growing up, I was never taught about those types of things, right? I was taught to work really hard, go to a really good school, get a really good education, and then go get a job and work for somebody till I'm 65, 67 years old, then retire and get a retirement check, right? So that's what I was brought up believing, you know what I mean?
Absolutely.
So for somebody to tell me something different, that really took me out of my comfort zone. So of course I just naturally just threw it away as it was garbage. But what ended up happening, the guy kept telling me, like, dude, you really got to get into it. And so what I ended up doing is, like, we agreed to go half on the Carlton Sheets program.
Yeah. Hmm.
I ended up paying for the whole thing, but it was okay. I really wasn't upset, because once I started digging into it and really studying the program, I really began to become a disciple of it and was convinced that it could work, right? But I wasn't so convinced that it would work for me, which is kind of, a conundrum for me, right?
So what was it that took you from thinking it was a scam to, as you got into it, I mean, even to taking the risk of the money, but then inside of it, what transitioned in your mind? Like, how did it change for you?
I ended up meeting a lady, and she helped me start my first business. She actually poured a seed into me that I could actually do this. And then what happened was, it was lack of knowledge, and I didn't believe in myself. I knew I could go out and do chemical engineering. I work at a nuclear pharmacy, a nuclear power plant, but I didn't believe I could go out and, really do this real estate investing thing. So ended up doing that, becoming successful at that first business. And then this is all while still in college. And then I raised enough money to go out to actually have the confidence to go purchase a house. And so I was trying to look by myself because I was more naturally an introvert. I'm thinking I'm smart. I can figure it out myself. But quickly I found out you need a team.
Yeah.
I don't care how smart
absolutely.
you are. You need a team. And so ended up meeting a realtor named Sue, really, really nice lady. And she showed me a few properties, came across a property that was cosmetically distressed. But other than that, I mean, foundation, all the kind of roof was still good. It just inside just needs some cosmetic stuff. So, I'm like, I'm going to try this Carlton Sheets thing on this. And she didn't want me to get the house because it wasn't moving ready. But I was like, I think we can do the Carlton Sheets on it. And she didn't know who he was. And I was like, just trust me on this. And I think we can do the Carlton Sheets on this. It's just like he said in the book, right? She was like laughing at me like, this kid, you know what I mean?
So what did he say? Like, for the listener, what was it you thought about that distressed property that you're like, I can do the Carlton Sheets thing? What did you think you could do?
Yeah, so I figured that I could make an offer to them below their asking price, number one. Number two, since it was cosmetically distressed and it had been sitting on the market for so long, I was confident I could probably get a concession or at least get the closing costs paid, at least most of it, if not all of it. And possibly even, number three, get some money back to fix the cosmetic repairs. Because this was a foreclosure that the bank had took back. So, of course, banks I knew were not in the business of holding real estate. They're in the business of servicing debt. Sue wasn't convinced, but I was like, look, just put the offer in and see what they say. Well, lo and behold, they came back and said they will pay for closing. They reduced the price. They said they wouldn't pay as much as I wanted in repairs, but they paid more than what my real target was.
That's
anyway.
Great. Yeah.
Right. So we end up closing on this deal. I'm in my early 20s and it was beautiful. They literally paid me to buy the house when it was all said and done. They literally paid me, Of course, the check went to my contractor, but me and the contractor worked out whatever we need to work out. And I was able to get more stuff done in the house that I wanted to. And at that point in time, being a college student, I'm like, maybe I'll rent out a couple of rooms since, going from a dormitory to a house, that was normal. And that's how I got started. But I ended up getting a little too comfortable on that first house and started diving into some other businesses that were, they were working, and I got comfortable with the money from those businesses. So it took me a long span before I bought my second house.
Yeah. Tell us the quick story of the buy that took you into really doing it for real.
Doing it for real, right? Well, I had a couple of clients that I was doing a few high-end remodels. A couple of clients didn't pay. a couple of clients were paying slow. They were good people, but they were paying slow. A couple of clients were paid, but they tried to do what you can do with a credit card. They can go in and say, oh, I can try to dispute and get their money back, right? So that put me in a bad situation there. And I'm like, oh, I got to do it. So I reached out to a couple people and said, hey, you guys know I do remodels and stuff like that, but I'm really going to take this investing seriously because it was for me. I had to, because if that was to happen to me again, I could lose everything if a client didn't pay or anything like that. What I did was I was able to raise capital because I had really great clients. I was able to raise capital, went out. We ended up getting a couple of properties, and I wish I could say, oh, it was perfect and it was all easy. No, we over leveraged ourselves. We ended up having to wholesale the properties, right? And I didn't really understand what wholesaling was at the time.
Just to get out of it because you were over leveraged, you needed some cash flow back in. Yeah,
I was over leveraged. Yeah. So the good thing about that experience is what obviously I learned don't over leverage, and then I learned how to wholesale a property, which was amazing. So I went out, got a couple more properties just strictly for wholesaling, right? Just to see if I can just wholesale it, right? And it went well. I actually made more money wholesaling a property than I would have trying to renovate it. And so that was really the turning point for me when I said, oh my God, I think we have something here. Only thing we got to do is just double down and repeat it.
Yeah, you can make money off of real estate and not necessarily have to even navigate the back end of all the ownership stuff, right? And if you can find it and you can get it to somebody else, then it works really well.
Yes. Because I still was able to solve problems because my whole spirit, my inspiration is being able to solve problems. Or now, of course, I'm not solving engineering problems, right? Thermodynamics, but I'm solving real complicated issues with people in specific situations at a certain time in their life that's looking for a transition to a better place. And I was able to come up with solutions and work with other people to help them transition to a better place, whether they needed cash or they need the house sold because they couldn't keep up with the mortgage payments. And I was able to get with buyers who needed a property because, either they did it part-time or they did it full-time. And for them to continue to take care of their families is that they had to go to the next property. I was servicing everybody. And of course, the contractors, they got the job, the realtors got their money. And I was able to get a fee by providing a service. And I was just hooked. It was like, this is what I want to do for the rest of my life.
Well, it's problem solving, right? And I think that that's the center of what you're doing, and so many real estate investors are doing, and business owners in general, frankly. It's like, okay, what do I have in front of me? What is the path I'm going down? And what are the problems I have to solve? What are the highest level problems I have to solve today? What are the level problems that I need to solve over time? And how can I make that happen in the smoothest, easiest way? And you're not always going to solve them the right way.
Exactly.
And so what happens when you don't? And so it sounds like, I guess, when they say you don't have to be a nuclear scientist to be a real estate investor, in your case, that is incorrect. You can be both.
You can be both. I would say, don't try to do this by yourself. I meet a lot of people, really, really smart people, high-paying W-2 jobs, and they try to do it themselves. I don't recommend that. I don't care how smart you are, or even if you're not really that smart. I don't recommend doing it yourself. I think you need to really squad up, get some really, really good people that are really specialized in whatever it is they do, whether it's a realtor or a contractor or a home inspector, whatever it is they do, that's their specialty, even if it's just acquisitions. You really want to have those people on your team and also add value to them. And that's really how you're going to really scale up, by first squatting up and getting the right people around you. And of course, get a coach, get a mentor. Somebody's already done it, because it speeds up the learning curve so much. So
if you're sitting in, a position where you got 3 to 10 doors you want to grow, you're listening to this podcast and you're thinking, all right, I want to find a mentor. What steps do you think that someone should take to find the right mentor for them?
Well, I think you just need to, it's a lot of books. It's a lot of Facebook pages. Books, of course, but there are a lot of Facebook pages on there that really deal with the burst strategy. There are strategies and groups online that deal with multifamily housing. And really, you want to become a part of the group and get engaged. And then when you're ready for a coach or mentor, they will appear, right? Because you're going to see who's really in tune with what's going on and who's really giving. And the thing is, with a lot of people, with a good coach is going to give away 80% of their value anyway. And then they're only going to charge for like 20% of it. You really want to be around a coach like that, where somebody's already asking questions and things like that online, right? You see kind of like their personality, their character. And then what you want to do is just kind of pull them to the side and say, hey, can you help me with this? If this is kind of like what you do, if you've already, because you at some point in time within the group, you'll notice that they've done projects, they've completed projects, they're moving on to another project, they're doing deals like you want to do deals. Things like that. Those are the things you want to really do. That way you're not rushing out and go get a coach, right? You're seeing it, okay, with this personality and what this person is doing, would that really work for what I'm looking to do?
I love that. Build your community, whether that's Facebook groups. Obviously, there's a ton of them out there, or forums on Connected Investors or Bigger Pockets,
yep.
Or wherever you're out there going. And then just watch who are the leaders.
Exactly.
And then connect with them. Do you tend to find that the folks who are the leaders, or the folks who can become a mentor to someone, are doing that as a profession or like coaching? Or is it someone who just takes another investor under their wing as just a almost goodwill?
I think it can be both, right? So I provide coaching for real estate students, particularly people who've already done a deal or two. So they're a little bit more further along versus somebody just starting out, don't even know if they really want to do investing or not. Most of my strategies are more advanced, but I think it could be both of them, because when I first started coaching, I really offered it for free as a beta test to see if it could really work, and also tweak a couple of things, because I noticed people kept hitting my inbox, reaching out to me, and I was giving away for free, but it was taking a lot of time. So I said, okay, we have to work out an arrangement where, okay, obviously you got to value my time, because I actually do this in real life. So I have to spend time actually trying to do acquisitions, dispositions, underwriting, things of that nature, right? So I ended up doing it, tweaking a couple of things, learning from those first couple of beta test groups that I did into what it is now. And it's really more on a one-on-one type of basis that allows me to really focus on what they really want to do, whether it's just going from 1 door to 2 doors, if they want to pick up a door every year, or they want to pick up one every quarter or one every month, or they want to do what I do, where they're trying to acquisition, 5 houses, whether it's wholesaling, creative financing, cash purchase or flip, whatever it is, more aggressively into it. And then, then go from there.
How important do you think staying on one strategy path is?
I think it all depends on where you're at. If you're just starting out, you're not really active. I think you might want to just try to stay on one path for right now. When you become more active, more experienced, I think that's when you can start venturing out. The thing is, you don't want to do too many strategies and start chasing your tail and get lost in the shuffle.
It's so easy to do too, because there's so much out there.
It's so much out there. You can get information overload, right? So you end up getting paralyzed to the point that your brain cells are fried. You get analysis paralysis, confused. The thing is, there's a million ways to skin a cat. Find one or two that works best for you, your end goals, and where you're trying to go. And then just really double down on that and move forward.
Yeah, I mean, you think about a painter, any kind of creative people, like they don't put every single color there is in the world on their palette and then paint in every single style that they, want to paint and do all those kinds of things. Like, we limit ourselves as creative people and as business people because there's an overwhelm and a sense in our brain at some point that if you have too many things in your head, your brain is going to just start pushing things out randomly. And I think that's when you fail the most. So finding, what your price range is, what your strategy is, those kinds of things, what kind of state the property is in when you go to buy it. Those are all elements that are going to help you only see the things you really need to see and be able to find those gems and things like that, right?
Exactly.
Hey, it's Jeremy putting my ad hat on right now. As you know, my primary connection with the investment property world, my zone of genius, is investment property insurance. I am the REI insurance guy. Our team at Shine Insurance takes care of investors from all walks and all strategies. If you need insurance for your portfolio, and of course you do, I'm offering a free one-on-one call just for REI Clarity listeners. On that call, we'll chat through your scenario, and I'll share insights and thoughts on how to get your insurance right and whether Shine is a good fit for you. No pressure, no slimy sales, anything. Just me on the phone sharing my insights. To book that call, go to shineinsurance.com/REI Clarity. That's shineinsurance.com/REI Clarity. All right, so let's talk about creative financing a little bit. You obviously see all different ways that we find the money, right? All different ways that we're able to invest in properties. You described one already where you essentially were handed money when you bought the property. So there's everything from that to just being the investor, the actual money person, and trusting someone else to do a lot of the other work. What are some of the ways that you've seen that are most interesting and most valuable to find that money?
With creative financing, you can do a number of ways, whether you're looking at just straight acquisitions where you want to do a seller finance, right? So you have somebody, say, over 65, has multiple properties, but they have this one property that maybe been their first property. They just want to sell it because it's not in the cluster of the other properties in a town that's maybe 45 minutes away. But they like the cash flow, but they don't like the having to drive out 45 minutes to an hour to go fix a toilet. They don't want to do the management anymore, things of that nature, right? So you can find somebody who has it free and clear, paid off, seller finance. You also can find people who are willing to do something that's called lease option. So you can lease the property from the owner with the option to buy it in the future. You have the option to buy it, option not to buy it. It's one of my favorite strategies, right? Now, with the lease option, the good thing about that is that you just control the property. You don't actually own the property. Also, that can be used for acquisition strategy. It also can be used for a disposition strategy. And how it relates to finding the money is this, right? If you have a homeowner who's willing to, say, lease out a property to you on a lease option for $1,000 with, say, $1,000 down, but you can lease that property out on another lease option on your disposition side for like $1,300, $1,400 with $5,000 down. Okay, that's how you create money out of essentially thin air by making it off the spread and noticing what you see that hidden gem at servicing the seller and then servicing the tenant buyer, right? That's one way of doing it, right? By leveraging the property.
It seems like you're juggling a little bit there. What are the risks that people maybe should think about when they're doing a lease option?
A lease option is similar to a standard lease. Maybe the person may not pay. What do you do then, right? Another thing that you could run into. What if they destroy the property? That's another issue you could run into. Now, the pros are that a tenant buyer mindset is different than a person who's just looking as a renter mindset. A renter, if the light bulb goes out, the toilet's not working where it's supposed to, they're going to call you over for every little thing. A tenant buyer, they're in a mindset that they own this house. They're just trying to correct a couple of things, maybe the length on their job, or maybe they're waiting on a discharge from a bankruptcy, or they just waiting to fix a couple of things on their credit. So they're in a different mindset. They're in a different mindset of, I want to own this house.
Yeah, they're going to take better care of it, and they're
going to take better care of it. Exactly, right? Also, the type of job a tenant buyer is going to have is going to be sometimes in a better situation than someone who is just a leaseholder. Because keep in mind, they're coming with 3 to 5% to put down. That's non-refundable, right? Whereas somebody who's looking to rent, they'll put down maybe first or last month's rent, maybe, but they know it's refundable.
So with the lease option, you've got the person on the tenant side who is going to become the buyer and who's in it. You kind of know you have a buyer in that space. And so not only are you making money in the middle, but then you know that that's going to more than likely turn into a positive situation at the end.
Yeah, exactly. Because a lot of times people are already qualified to buy a house, or they're almost qualified. They just need like a couple of tweaks or a couple of hacks needed to get them over that hump. While you providing the service to people, they're able to rectify whatever issues they need to have on the credit or job or discharges or whatever they need to do to end up getting that particular property.
So when you're doing lease option stuff, are you looking for that particular buyer or tenant buyer who is, on the edge of being there, but just not quite there yet? It's almost like you can help that person out in a lot of ways.
Yeah. So with the tenant buyer, I want them to be almost there to be able to qualify for a loan, right? So that's one of the reasons why you want to squad up, like having a mortgage broker, having somebody who does like credit repair on your team in that local market, so they can help see, okay, look at the profile of the person. Okay, can this person get qualified for a loan within about a year or two if they had enough time and guidance? And then a mortgage broker will be like, yeah, they just need to do this, this, and this, pay this down here, maybe get an extra trade line or two here. They can kind of guide you until you become savvy enough to know exactly, when you're looking at a profile, exactly what that particular profile needs in order to get qualified for a mortgage, right? So they can end up cashing you out.
Yeah, what I love about what you're saying is I'm picturing everybody in this process. I'm picturing the seller, picturing you, I'm picturing the service providers, and I'm picturing the tenant buyer. And what you're doing by doing it the way you just described seems like it's helping a lot of people. You're providing access to folks who maybe wouldn't have had it otherwise. You're providing a selling opportunity in a different way than maybe the seller would have had. And you're finding a way to make money in the middle as well, which just feels like a nice, like everybody wins type of approach.
Exactly. Everybody wins, because keep in mind, if a seller has a situation where they have a great job offer in Phoenix, but they live in Tampa, well, what are they going to do? Not just let the house foreclose in Tampa and have it on their credit going to Phoenix? No, you don't want that, right? Well, somebody like me say, hey, man, but they can't sell the house because maybe they don't have enough equity in the property to sell it.
Yeah.
Right. Well, I come in and say, you know what? Don't worry about it. Right. And I actually take care of paying their mortgages, make sure the property stays up to date, even sometimes go and put some of my own money into the property so we can move on to the next buyer for that particular property so they can go on and live their life.
Awesome. Okay, cool. So seller financing is one. Lease option is the one we just dug deep into. What's another way of doing creative financing?
Yeah. So another way is a land contract or contract for deed. So you end up running to these situations when, say, a homeowner is not comfortable transferring you the deed to the property until it's paid off. So a lot of times I find this is when there's a mortgage in place and they don't want to transfer the deed, but you still want to get it on terms, right? Because essentially all this is just terms, right? What happens is you work out an agreement with the homeowner and say, hey, okay, I'm going to pay you this amount, or I'm going to pay directly to the mortgage company. Then I pay you the difference. However you work it out. I generally pay the mortgage company because I have to make sure the mortgage gets paid.
Make sure the mortgage gets paid. Yeah. Yep.
Make sure the mortgage gets paid and insurance gets paid.
Yeah, exactly.
Get paid, all that kind of fun stuff, right? Even if I got to pay a little extra to make that happen, it's not a big deal, right? Because I always make sure I get my property at a good price. And then once I finish paying it off, I get the deed, or I can assign it to somebody and they get the deed.
So you do it both ways. Sometimes you're doing a contract for deed where you know you're going to end up in kind of a buy and hold at the end, and other times you're essentially doing it as it's almost like a long-term wholesale.
I guess it's more of a long-term kind of seller finance that's different, right? Because you don't actually have the deed, but you actually working towards the deed. Now, the only thing with it is, right, and one thing you don't have is you don't really get to take the depreciation. The reason I like seller financing, and another one is subject to existing financing, we can talk about that if you like, is that we get the deed to the property, right? Once we get the deed to the property, we can depreciate the property. So if we're looking to get $200-$400 spread in income over the current mortgage amount, we many times can depreciate that money. So yeah, we're making $300-$400 a month, but our friend Uncle Sam allows us to depreciate it and says, okay, we're going to give you a credit. So anything above that, that's what we're going to tax you on. But anything below that, we're not going to tax you on, right? So you have that depreciation aspect. You kind of lose that with the lease option. You lose that with the contract for deed. But if you're making enough cash flow, everything balances out. And if you are really trying to do creative financing, right, and stay in that realm, you're going to have other assets that are going to allow you to depreciate off any earned income for that particular corporate entity that you have. So that allows you to balance everything out. So you can make money and not have a major tax liability.
I love it. Okay, let's hit one more. You can do subject to existing if you want or whatever. What's one more thing that you do inside of this? I mean, what I'm kind of getting a picture, I'm coming back to you describing yourself as like a nuclear scientist or whatever. And as you're talking about all these different creative ways to finance and buy and sell and hold and everything else, I'm sort of picturing like all that same type of interaction, but in real estate instead of in these other spaces. So what's one more way that you do this?
Yeah, so you can do subject to existing financing. We're working on a deal in Milwaukee right now where it's a duplex and the owner is receiving $2,000 a month, but the owner doesn't want to deal with the property anymore. He's at retirement age. He don't have to deal with it. So he want to go out and do some other things. So he's willing to do a subject to existing finance and seller finance. This one's kind of like a hybrid. The deal to us, and then we're going to pay him $1,000 a month, which is going to take care of existing financing and it's going to take care of his spread off of this whole experience. So with the subject to existing financing, what we do is we keep the mortgage in place, but we are deeded the property.
And the mortgage company's okay with that?
It all depends on the mortgage company, right? Because most mortgages have a due on sale clause that you have to be aware of. You also have to disclose to the homeowner that there is a due on sale clause, right? And this is something that you actually go through with, because when say like this owner here, when they close the particular property, there are a list of documents that he received. So one of them was obviously the mortgage statement and agreement and things like that, and it explains what a due on sale clause is. Well, the good thing about the due on sales clause is that most of the time it's not even activated, right? Number one. Number two, yeah, they don't kick it in. As long as the mortgage keeps getting paid, they're good. Now, I will say with smaller banks, they do a lot of times kick in a due on sale clause. But there are ways around that, right? We can spend a while talking about that. Right. But there are ways around that to keep it flowing and how you can do it, right? Because they can't just foreclose on you if you've been paying.
Oh, totally. Yeah.
Right?
Yeah.
Yeah. So that's in itself. So you have to be aware of that. The homeowner has to be aware of that and be okay and have a strategy to handle that if it does occur. So I already have a strategy for that. It hasn't happened to us, right? But if it does happen, we do have a strategy where it does. We're going to address those things, right? So the mortgage stays in place. We're deeded the property. Since we generally deal in states that allow us to have a land trust, we generally transfer the deed into a land trust. Now, land trust does provide anonymity, right? So you don't really know who it is, who are the beneficiaries of that land trust. Now, unless you're in the state of, like, say, Arizona, right? Arizona, you have to list the beneficiaries, but we don't do land trust in Arizona. If we're in Arizona, we just transfer it straight to the LLC and then update the insurance, okay? But what this does is it allows us many times as investors is to get a interest rate, take advantage of a homeowner's interest rate. So we take it over at that 3, 4, 5% interest or whatever, or 2% interest, whatever it was, and we get to pay it. Also, keep in mind that a lot of times these properties have been the last sale date was like, 5, 10, 15, 20 years ago. The good thing about that, especially when we're going and getting a fixed rate mortgage, is that you have this pay down, because around the 17-year mark, the actual on an amortized schedule, right? What happens is that you end up paying more principal per month in your payment than interest.
Oh, that makes sense, because you kept the existing mortgage. You were able to be at whatever place that mortgage is at in its process. So you're more likely to be paying fewer,
Exactly,
lower interest and higher principal. That makes total sense.
Exactly. So the pay down is quicker. So instead of getting a brand new mortgage and having to do a 30-year or a 20 year, we have a pay down much quicker.
So that's why it's called subject to existing, is it's all about keeping that mortgage in place. That's like the key to that particular approach, is the fact that that's happening.
Yes. So you want to keep that in place.
Okay. So we just went through 4 different ways to do creative financing, all of which take a little bit of legwork, like take a little bit of you knowing what you're doing, making sure those leases are right. I mean, tons of what you just described has to do with setting up proper leases. Am I right about that?
Yeah, there's proper disposition strategies. It makes sure you get the right purchase and sale agreement, because the purchase and sale agreement on a standard cash offer is different than a subject to existing purchase and sale agreement. So that's why you want to get like a coach or a mentor that's already been doing it and work with them on it till you get the flow right. And then you can start doing it yourself.
Cool. So we talked about seller financing, lease option, contract for deed, and subject to existing. Those are 4 ways you figured it out. And I agree. I wouldn't just jump into this without someone who knows what they're doing for sure, and then take it from there.
Exactly.
All right. Real quick at the end of this show here, Dee, what are 3 steps to clarity that you think investors who are at that 6 to 10 door place really need to focus on so that it leaps to the next place?
Okay. So if you're less than 10 doors, you're still small. You really want to begin to look at your mindset and looking at possibly scaling. So obviously you will have to do some additional reading that deals with the mindset and scaling.
Mm-hmm.
One book is called Traction. You want to look at. Another book you want to look at is 4 Disciplines of Execution. Another one is Split the Difference. So these are certain things you want to look at and read and really study these types of books, and also hang around other people who are reading and studying and working on their mindset, because it's going to tie into systems. You're going to really start to need systems in place in order to continue to do more deals. Just trying to scribble it on a sheet of paper and try to do everything yourself is going to get overwhelming if you don't have the right mindset and systems in place. Like, how am I going to acquisition this property? How am I going to find financing for repairs? Am I going to use all of my money, or I'm going to use business credit, personal credit, get a loan, whatever it is you need to do, right?
Absolutely.
Then you also got to look at your disposition strategy. Even if you're keeping the property, you got to look at, what is my exit strategy? All this stuff you need to know this before you even close on this deal. You need to know your acquisition, repair, and disposition before you get into this deal, right? Another thing is, as you transition, is also your team or teams if you're working in multiple markets like I do. So you got to have certain key people in place, right? Because you can't be everywhere at the same time. You got to have people in place that you can delegate one specific task to get accomplished and trust them to do it. Now, this will require you to hire fast and sometimes fire fast, right? So you might have to go through, for every 10 people, you might only keep 1, right? But this is something you just have to be aware of. And as you begin to really scale into this realm of your life, begin to really start to study, okay, how can I become a more effective manager? Because you got not just an investor, but a manager, because you got to manage your mindset. You got to manage the systems and also the teams.
Yeah. And it's such a hard switch, especially if you've been doing just a few, you've been doing it by yourself. You have been doing things on napkins and on the back books or whatever. And now you switch into really having to manage people and manage systems. In my business, that was a tough switch. I really liked just doing all the stuff by myself, just talking to people and doing the work. And there was a realization where you have to level up if you're ever going to be able to scale. And obviously, scale is how you really create financial freedom in the real estate world. If you're ever going to be able to scale, the systems have to be there, the mindset have to be there, and the team has to be there. You have to be capable of teaching other people the expectations that you have and how that works, or it's just never going to run smooth together, right?
Correct.
Cool. All right, Dee. So if folks want to find you, how can they do so?
You can find me at Dee Stevens on Facebook. That's pretty much the easiest way. I'm not really on other social media platforms. But yeah, Facebook, Dee Stevens, Dee Stevens, Stevens.
Dee, thank you so much for joining us on REI Clarity. I love what you're doing. I love watching what you're up to. And I really appreciate that you're out there sharing your knowledge with other folks so that they can learn as well.
I appreciate you too.
Special thanks to Dee Stevens for taking the time to share his insights with us. I'm feeling super inspired, and I hope you are as well. So who do you know that needs to hear this podcast? Who needs to understand creative financing a little bit better? Maybe they can do some seller financing or some contract for deed or some of the other things that Dee talked about. Someone who just needs that information that Dee just gave us. Grab your phone and send them this episode. Let's help everyone level up. Okay, last things. If you haven't rated and reviewed the show, please do go over there and do so right now. If you haven't joined the Facebook group where we're having community conversations about all of these topics, go ahead and do that as well. All right, until the next time, here's to clarity that brings financial freedom faster.